Good evening traders, Russell Sandiford here for your weekly market outlook for easyMarkets. Well, last week certainly finished with the US dollar bulls scratching their head just a little. The reason for that, of course, the headline end of the week data was the US CPI or inflation. It was a slight miss on analysts' expectations and projections, and so were the retail sales data flow that came out on Friday. I think this is a similar example to what we've seen here for the Aussie dollar, where we get a slight miss in the China data, and we all need to just step back, take a deep breath, and remember that when the growth is still growth, even a slight miss is still a positive number. So for mine, I don't think that dollar bull story is completely done. I know the dollar yen this morning here in Asia has drifted back now under around that 111.70 level. But for mine, look, Janet Yellen, it must be noted, traders, Janet Yellen was out at midnight last night, so Sunday in the US. She was extremely reassuring to the market. She basically stood up there and said, we are confident that inflation will get on track and get into the target levels that, of course, they're looking for. But she also did point that torch quite brightly and highlighted very positively the positive wage growth number that we did get a fortnight ago with the non-farms data release. Now, what that says, if I can translate, for mine, that's a big screaming signal that the US Fed are ready, willing and want to lift rates there in December. I'm still rather surprised that the probability for that rate hike in December has dipped a little from 87% back to 83%. I'm not sure I'm buying into that. I'm confident that's going to happen. But look, that's a little ways off. What have we got this week that's going to move the needle? It's again another week of inflation story coming through. That kicks off tomorrow with the Kiwi and the UK inflation. Bear in mind as well that Bank of England Carney will testify and speak in London midweek. That will definitely rock the sterling boat. Now, on the same comment and the same pair as well, you must know as well, Theresa May is in Europe for an important meeting. If anything positive filters through, trickles out, or is said as a result of that meeting, of course, with respect to the ongoing Brexit negotiations, the cable made it to 133 last week. It can certainly make a run for 135 or higher if something positive comes out of that Theresa May commentary as a follow-through. I'm not totally convinced on the sterling story at the moment, but again, the inflation might be the one that tips it over the edge as well. At the end of the week too, guys, there's also the Canadian inflation, so be careful on that one. Remember, the Bank of Canada were the ones that said we're going to move on rates. They moved very quickly, and we all know what that did to dollar CAD very sharply. Now, with a slight miss in that inflation and retail sales headline number there on Friday for the US, if that Canadian data piece is good on Friday, that's a great trade for your end of the week for that pair to really make a push lower once again on dollar CAD. Now, big story for the local traders here is the Aussie dollar on Thursday. It's going to be big because you've got the China industrial production data out after the Aussie retail sales. That is always one that moves the needle. The Aussie's having a bit of a climb here on the London Open, having a nudge towards 79, which is an interesting handle for the Aussie to possibly recapture. It's kind of an 80-20 currency, so if it can claw its way to 79, maybe we're at 79.50 or even back at 80 cents. Very possible if that retail sales data for Australia and the China number is supportive. So look, otherwise, where are the risks and opportunities? The Kiwi dollar, let's not forget, we've almost forgotten, but let's not forget that the Kiwi election results will hopefully finally flow through in the media at some point this week. That can potentially give the Kiwi a very big Tuesday. So be very careful there. It has come down a long way, so it can snap back just as quickly. I like that trade, actually. I like the long Kiwi trade. Frankly, based on that election positivity or certainty, I think a lot of buyers on the sideline will very quickly, in the short term at least, bid up that Kiwi dollar again for a move higher, at least one big figure. Could be a very good trade there. Now, I can't stand here and not mention the oil move. This is a big story that developed Here today in the Asian session, the Iraqi Prime Minister made some interesting moves in relation to sending military to retake some areas where there's a lot of oil fields there in northern Iraq. Now, what this means in relation to the oil price, we've already seen as the London market opened a run through that 52 level. I think there's a long way to go on this oil rally. I called that this morning with some of my other clients here at easyMarkets in Australia and Singapore, up to $55. It's got a long way to go to get there, but I think that's a marvellous trade. Now, at the same time, you've got Donald Trump potentially imposing more sanctions on Iran. That won't help the oil level that will be supportive to the oil level as well. So again, the long oil trade at the moment is definitely getting my attention. Gold's another one. Gold's having a little drift to start this week above that 1300 level. So anyone looking to trade commodities, you've certainly got a lot of options on your plate this week. But for FX traders, there's a sprinkling of data every single day coming in. So for mine, that Kiwi long could be very interesting. And getting long on the cable is one of the trades we really love here at easyMarkets because it's already found steam to 133. Any positivity in terms of commentary, or that CPI number, or of course a comment from Bank of England Carney. There's a lot of reasons why that cable, the sterling against the US dollar, could be back at 135. Have a great trading week, and as always, if you need a hand, just reach out.